Okay, welcome, folks. We are going to have a look today. It's Wednesday, the 9th of March 2022. We're going to have a look at something I'm personally looking at, which is the US driller space. And I'm really I haven't done too much prep on this, but I'm going to go through basically a hypothesis with regards to US drilling and obviously the outcome of what we may get from Russia banning US banning the Russian imports of oil, gas, natural gas, all that stuff. All right, so was really interested to read an article here, and let's get over and look at this on rigs, the rig count, right, and where are we with the rig count at the moment. And so for me, the US coming off Russian supplies, it's only 3% now. It's only 3% of their demand needs, so it's not a big amount. But I think there is a play to make here on US drillers, because essentially in a tighter future where Europe is potentially constrained on its energy supplies from Russia, potentially Putin shutting down some or all of exports through the Nord Stream 1 pipeline. Nord Stream 2 is forgotten about now. We're going to see a push on drillers really worldwide to ramp up production again. Okay, so this is sort of coming out of the back end of what happened really in 2020. A lot of these big drillers just said, you know what, we're not investing in drilling and production for the next 2 years. But now we have to kind of come out of that space, and so coming out of that space will involve more drillers at work around the world, but also in the US, right? And we can trade these US driller companies. Okay, so when is that going to happen? Well, we would look to the Baker Hughes rig count every Friday. That comes out to see, are these drillers getting back to work? And essentially, North American drillers act as the US spare capacity. Okay, so that's their ability to ramp up production or ramp it down quite rapidly. So I think looking at the statistics, of how many rigs are back in line now, we're almost back to about 500 rigs. Just let me confirm our current rig count here in North America. Let's see. Here we go. Total rig count for Baker Hughes is currently sitting very low levels here. Let's see. Total rig count. Yeah, 519. All right. So to kind of dive into this a bit more, all right, I wanted to be able to look at reputable source of someone who knows a lot about this, and that would essentially be Vladimir, or sorry, not Vladimir Putin. He's on everyone's mind at the moment. That would be Daniel Yergin, and Daniel Yergin is of course with IHS Marketing, right? So, or sorry, IHS Market Energy analysis, right? And so, sort of looking at that, we can kind of come across to an article that was done by those guys. I think this is about a year old at least, but this is sort of an examination by IHS Market on the rig count situation. Now, when this article was written, they were looking at projecting US about $70 to $66 a barrel WTI through to kind of 2023 as the average. Now, I think that may be skewed a little further to the upside given the situation that we have. That when they were writing this report, they were looking at 107 being kind of the top, but they weren't figuring in that there would be an invasion of Ukraine by Russia, right? But they're in this trading hypothesis, right, where we maybe want to making a play on energy in some aspect, right, and maybe it's in the drillers. We need to really extrapolate not the kind of broader scenario, what's the price of WTI, but I really am looking for information about the drillers, what's their capacity to ramp back up again quickly. Some of the pipeline companies in North America are suffering somewhat on their revenue balance on the balance sheet from the revenues because the Permian Basin, for example, the center of fracking is not, and horizontal drilling is not really fully back there, right? Yeah, we're 64% up year on year, but that's from a practically zero base, right? A zero base. So, um, if I bring over the Baker Hughes oil rig count figure here, you can see these little videos are annoying. You can see basically we're back to currently about 519 rigs. Now this is pre-COVID. We were, yeah, even March 2020, there was 682 rigs at work. Then we came down here through COVID. No more production or investment in exploration or production, and very low, and so slowly trickling back, right? But we're still nowhere really that near to the pre-COVID production levels. But what we have to figure in is that we actually require this higher upper level of production activity to even uh, you know to replace current global demand and current US demand, right? So you can see how we're really jawboned here on supply versus demand, right? And this is where the supply is produced as from these rig counts, right? On Baker Hughes, this is the kind of back to June 19 or Jan 19. If we look at the max, right, on this chart, all right, if we look at the max here, you can see that through the shale boom really kicking off around, well, technically it actually started in around 2004, but really only kind of got crazy as we kind of came into 2009 up to 2014, topping out, and oil of course topped out around $147 a barrel. Here Obama was in office, there was literally no storage for the amount of oil that was being produced. America was top dog in terms of global production at this point. I think topping out at about 13 and a half, possibly 14 million barrels a day, right? So, when we really came into 2014, too many of these frackers were highly leveraged, meaning that they were operating on borrowed money at higher interest rates, okay, coming out of the global financial crisis, okay? So, really, it was unsustainable for them to keep this dance up of, and a lot of them really just got absolutely wiped out here as you can see into the lows of 2016, right? But now, as I said earlier, these drillers are going to act as the U.S. spare capacity valve, as in we need more oil, fine, we'll get more fracking back up, we'll fire up that engine again. Um, so so I suspect that we can get into some fairly tasty drilling company prices over the foreseeable year to 2 years that are ahead, and this may be the final swan song for these drillers as we go forward, right? Because with Europe having to transition away from energy reliance on Russia, this in my mind is also going to exacerbate the energy transition to green decarbonizing, etc., etc. Okay, so I mean the petrol prices you're going to have to pay for the next 6 months to 12 months are going to be phenomenal. Okay, so that's in itself demand destruction, um, sort of a demand destruction event, if you like. There's nothing like curing high oil prices than high oil prices, or as they say, there's nothing better to cure low oil prices than low oil prices. When it's just too low, everyone stops producing, and then there's a scarcity, and so then you have this like elasticity that kind of goes on, and it's always this careful seesawing balance. Um, so we've come out of the cure of ultra low prices, negative $36 WTI, to now, what are we at, Mark? 125 or something like that. Okay, so this is kind of all feeding into my hypotheses for I like the drilling space right now in North America. Okay, so we're going to go from here to then looking at the charts, right? And so if I just kind of drop this off here, these ones here, well, we can come back to this IHS Market article first because I want to see, well, who's got the fleet of rigs in North America? Well, you've got essentially this is a projection here of what the growth would have been on the rig count, you know, without the Russian complication, right? So you can see here, 2022, the projection is actually meant to be about probably 750, right? But so we're still in Q1. I think that's fine. I think we're well on our way there to about 750 figure over the next quarter. But what's more interesting is, as I read this article, I'm thinking, if we're going from currently what did I say, 550 rigs, if we're going to then 750, and actually now we have to count in the war, all right, well, the invasion, we're not really calling it war right now, are we? So if we have to count that in, and the invading party is one of the world's largest energy component countries, well then, once this starts ticking up, I think we can blow out above 750, but I think we can get way back to those 2014 levels, um, but with much more responsible balance sheets for the oil service companies, right? Much more responsible balance sheets, as in they're not getting to work drilling on super expensive borrowed money. All right. So that's another positive for this trade thesis. So then, handily enough, I can scroll down here and I can see, well, what companies own these North American fleets now? I think Precision is a Toronto listed company. I think Trinidad might be also Toronto listed. But most of these other companies are US listed now. I think Savannah is a pink sheet company. But you can see that the breakdown of the share of the North American fleet here, right? So if we can transition from that, well, we can go, right, well, I want to look at some of these companies and I want to see, is there a good trade here to be done? Now, obviously, with the way things have gone over the last month, a lot of these companies are going to be very expensive right now. But here we are looking at most of these companies, apart from the Toronto listed ones, on the monthly bars all time view. All right. So we could just go through, like, say some of these, like Neighbors is quite a large concern company. This, they've been around for a long time, but you can see how cheap this is right now. Right. So if we just do a cursory analysis on this, just a little bit of very simple price analysis on the all-time here, all-time monthly bars view, we can kind of see that we're so depressed down in price here right now. It kind of is a familiar type of chart pattern to me on some of these companies. But for example, Neighbors, $159, all the way down from an all-time high in 08 here of 2,529. Right, this is severely, severely cheap in the face of what we have now just talked about, which is quite a buoyant catalyst coming into the market, right, for the U.S. Shale industry. Okay, so really, this is just for purposes of analysis. I'm not telling anyone how to trade. I'm not recommending any specific trades to anybody. But I think there is room for growth here. For example, and just a very cursory look for Neighbors. All right, let's keep going here. All right, here we have what is it? HP now. Excuse me, I'll just have to. I think this is Precision Drilling. Have to confirm that. So it's Helmerich and Payne, right? Helmerich and Payne. So Helmerich and Payne, again, 42. Yeah, we've had a great 3 months so far, lifting up, even a great 1 month on the breakout of this sort of area here around, 33s. Yeah, there's a breakout there above that sort of June 21 high, 36s, sort of confluence here with that kind of push down in 2019. And then COVID just absolutely rocketing down through that sort of level there, 36, 26s. But, I still think there's a lot of room for growth. Looking into kind of these range, there seems to be a very thick range here from kind of 36 to 52s up to like 73s. I really like that range. I'm not on, like on futures markets intraday. I'm not a range trader, but once you give me a monthly bar, then I am a range trader for sure. So, I like a lot of the growth potential here as well in Helmerich and Payne. Um, Very simple analysis stuff. Actually, we could probably also zoom in a wee bit here and put on a Fib extension. Guys in the Discord do know I love my Fib extensions. So from this low, this push high, and then the pullback, yeah, this is kind of what I would see. Next up is 47s on the 113.8 extension of $48. Yeah, $48. And actually, I think, yeah, we could easily kind of sustain a push up here over the next 12 months on this market. Um, what else have we got here? We're looking at, I think this is Patterson. Yeah, Patterson Drilling. Again, you see we're pushing back up generally into this sort of range here on Patterson. Right, so the sort of 1997 high, 16 spot 31s. It's just providing a little bit of resistance now on the current month in this market. But above there, there's a little bit of a range to work here on the 20 spot 73s thereabouts, 69s, which is the kind of 2001 high. But all time highs here, 38s, and we're currently trading pretty much under half of that, like 40% of that. So there are some really nice targets for some of these companies, sort of a low, mid, and high point on this range here. Sort of looking at 27s. Going even further along, unit here. These guys are quite cheap. Really only trading since 2015. We're already down to that 2016 low here. Now, just I'll finish off on this, and then we'll kind of have a bit of a discussion on how many friends you're going to win by investing in oil drilling companies. But it's not going to be many. Now the all-time high up here, 34.63, and sort of midpoints 23s here. But I do see that once we can get back on 14s and close a month above 14s, or even open and close a month above 14s, I think we really double down or double bag the return on that one. What are we on to here? This is Cactus. Is this Cactus Drilling? Yeah, it is Cactus Drilling. Again, you're seeing it's going. It's on the run already here in Cactus Drilling. Probably not a lot of value to be getting here right now. Buying into the highs. You're already seeing excess into those highs there. Probably use a bit of Fibonacci extension tooling here from the low, the push high, pull back, and look at that. Yeah, the 2618, 261.8 extension really putting up resistance. So yeah, I mean, look, I'd love to buy this probably on a pullback to 36s. Probably won't get that in this environment. Maybe get 44s. But I really actually do like the strength of this here, because I don't mind that it's paying respect to the kind of Fibonacci sequencing. The ultimate target on this would be 91. So the risk reward here a little bit skewed, to be honest. Buying 44s, getting out 91s. That's a bit better, but buying at market 66 is getting out at 90 or 60s, getting out at 91s. Risk below 44s. I think you're about 1.5 to 1 on that one, so I don't know about that. And then here we are in the pink sheets for Savannah Energy Services. Now this is pretty much what a pink sheet company would look like. It's trading at currently 39 cents at market. There's not much to derive here in terms of support and resistance. All-time high is currently at 92 cents. I'd rather not, wrestle with a pig and get dirty here, as a smart lawyer once told me. So, yeah, I mean, could this explode? Look, anything could happen on these pink sheet companies, but I'd rather not trade a pink sheet. And then you're into Ensign here. Inside it's part of the Ensign group. So these guys also own quite a fleet of drilling rigs on and offshore, I think. So you're seeing just, nice level there to buy. 63s on the pullback. Um, there's a certain amount of Fibonacci sequencing going on here as well. If we just change back to the tool, we can kind of go from the low here to the high to this deep pullback. And there you go, it's into the 161.8 again, putting in the high around $98.6. So see the pullback back onto the 100% extension. Buyers loving it at 70 and a half dollars. So yeah, I mean, any pullbacks under to say like the 61.8, I think that's super cheap on these companies for the next 2 years for sure. So I think that kind of wraps it up on a technical outlook on these companies for now. So, you know, being the perma bull on oil, yeah, as I was saying, you're not really going to be making too many friends, but that doesn't mean, you're not trading and investing to make friends. You're trading to make money and to make percentile gains, right? So, yeah, I mean, for this, the pick of the bunch for me is actually probably Neighbors at the moment, just looking very cheap, very cheap. So 159 bucks a share, something a little easier to get into. If you've got 1,000 to 10 grand, you're going to get a few more shares for your money. On the Helmerich and Payne play, it's currently trading about 42 bucks. So anyway, I thought I'd just jump on, have a session, and really look at this. I think we are going to see a lot more upside on these drilling companies for North America over the next 6 months, or even the next quarter, and into a 2 year push. Given what we see happening on the energy front at the moment. Okay, please do click to like and subscribe, and feel free to join us in the Discord room. We're looking at these markets every day, mainly on the futures, and be careful out there. All right, stay safe. Bye bye.